Hey guys, my name is Khan and welcome to the new episode. In this video, we are going to learn about new entry module that how you can trade based on the liquidity strip and how we can spot them. This is a very interesting and very important video because a lot of people don't know exactly to where is the liquidity. In this video, you will learn all about liquidity, that how we can easily spot them and how we can take advantage of the liquidity, and you can apply in your trading session sweep, and you can also apply structure sweep. So this is a very interesting and very important video. If you're new, subscribe the channel and don't forget to join our free Telegram channel, link in description. Go and check out. Now let's switch into the topic. First of all, you have to understand you can apply in your any market like forex, crypto, stock, bank nifty and other indices. This type of entry applicable everywhere. Now let's see how actually it work here. So this is a GBP USD chart in a 15-minute structure. Now you can see this is a looks very complicated. If I want to ask you here to mark the valid POI, then where is the possible POI and when we can take entry? Most of the people mark this is a break of structure, right? And after break of structure, people called it this one is our POI. This is a here. What about this POI which is here? And some people mark this is also POI, and some people mark this as a hidden base is here. Technically these are possible entry. What smart money traders think like this: break off structure, find the order block and wait for lower time frame confirmation and then sell. But most of the time these things actually not working here. Why? Because market need liquidity and you have to identify where is the liquidity. Find the liquidity. Liquidity is important compared to the order block. Order block just a refinery version of the entry. Order block is not means smart money concept, and about the break of structure, change of character, these are not smart money concept. Smart money concept is identifying the liquidity, because liquidity is a big part in smart money concept. Once you identify where is the liquidity, then very highly chances your trade gone in your profit. Now let me show you exactly that how you can spot the liquidity point and how you can react into lower time frame and higher time frame, and what is the benefit to identifying the liquidity to take an entry to marking the structure. First of all, remove all these things is here. You can see here when market is a bearish or bullish, it doesn't matter. When market is a bearish, then market moves something like this. When market is a bearish, then market move something like this. Okay, and people called it this one is your break off structure, and break off structure. And finally what happened here, market break this high, and this one is a called change of character. No, this is not a correct structure. Actually this one is your single leg is here. This is not a break off structure or change of character. You mark this as a change of character. No, this one is your inducement. Market need taken out this inducement and go higher, and then market push downside. And why this happen here? Because before go market downside, market need liquidity. Before market go higher, market need liquidity. And now your structure move like this. Okay, so this one move, actual structure is here. And if you don't know exactly that how you can mark the valid structure, you can watch my recent video which I uploaded on YouTube, which is a very important and very powerful to understand that how structure actually working. Now let's see that how we can spot the entry point and spot the POI point in a higher time frame. So if market is a bullish is here, okay, and when market is a bullish and sweep the previous low, in the condition of the sweep, market just taken out the previous low and this candle not close below it, just close above it. Okay, and you can switch into lower time frame, then you can buy here. And the another possible entry is here. If you are looking higher time frame entry, you can simply buy here and put the stop loss just below it and target this high, right? So this is based on the liquidity sweep, and I will show you on chart, then you can understand more better and more clear. Look at this chart is here. If market broke this structure is here, okay, when market break the structure, you are looking for the order block, then sell, which one is on extreme, which is a very good. Okay, and if market not tap your high probability order block, which one on extreme, then what you should do here for the sell in this case. Okay, and when you can buy or sell, you have to mark first structure and find the high or low and wait for the liquidity sweep. You can buy or sell. And second thing, you can also buy or sell after session high or low sweep. In this case, you can see here market is a bullish for the short term is here, then how you can take entry? Let me mark the first structure is here. I'm marking a normal structure, not an inducement structure. You can see this high and this low. I'm talking about the normal structure, which one is here. Okay, then market continue go higher high, and then finally market take a pullback is here, and this one, and I think this one is also here. Okay, and again finally market create structure something like this. So in this case, if I want to ask you here that where is the PY and how many trades is possible is here. Remember one thing, when market is a bullish, then market taking out the low, then you will get high probability buy setup. If market is a bearish and taken out the high, then you will get high probability sell setup. So in this case, if you can see here, this low is a protected. If market taken out this low, this can be your high probability buy setup to the upside. Okay, and why we are buying here? Because we have a high probability order block on the extreme, which one is here, until you can buy here for the short term. But you have to remember one thing, you can buy only after taking out the low, means liquidity sweep, and you can also sell here. So you can see here this high sweep here. When market sweep this high, you can switch here into lower time frame. In a 1 minute you can sell here. Okay, and the next attempt, what happened here, market again push higher high, and these are short-term selling opportunity is here. Why? Because market momentum is a bullish. When market momentum is a bullish and market sweep the previous high, which will give you short-term move to the downside. When market sweep the low, which will give you strong momentum to the upside, because you are playing with a trend. So same thing happen here. You can see market sweep 2 times high and market give a short-term move to the downside. Now you will see here when market sweep the low, which one is here, correct? When market sweep the low, then market give you strong momentum to the upside. At this point, you can buy here when market sweep this low and candle close overweight. Wait for candle closer. Don't need to buy or sell immediately after taking out the low or high. First, wait for the taking out the low and wait for the candle closer. Now you can switch into 1 minute. Then you can buy or sell after chalk, pause or flip anti module. And second thing is here, if you don't want to look into lower time frame, then you can definitely buy higher time frame perspective, but your risk reward is reduced, because in a lower time frame your risk reward increase, but higher time frame risk reward decrease but high probability increase. So you can buy here, wait for candle closer, next candle open, you can immediately buy here, put the stop loss just below it. Why? Because market taking out the low means all stop loss collected here, and you can set your target previous high, which one is here, right? So this is a possible entry is here, and main target you can set here, which one is extreme order block is here. So this one is a possible entry is here. Now let's see what happened next here. Now you can see what happened after this one. You can see this low is here, okay, and if I extend here, then you will see what happened here. Market sweep this low, okay. When market sweep the low, you can switch into lower time frame. In a 1 minute structure, you can buy here. Why? Because market taken out the low. Why market not go higher? Because market already tap on your extreme POI, which means market actually looking for the downside. If market sweep the previous high, those will give you strong move to the downside. So same thing happen here. Market sweep this low and you can switch into 1 minute, wait for chalk pause and you can buy here. In the next attempt, what happened here? When market taken out the previous high, just sweep the liquidity, you can sell here. Why? Sell is a high probability. First one is here, price already tapped on your extreme POI and market momentum is a shift bullish to bearish. So sell is a more high probability, buy is a low probability, but you can take risk for the short term buy. So this one is your buy entry is here for the short term, and your target at least this high, okay, and you can switch your stop loss on break even after taking out the first high. When market sweep this high, you can sell here for the high probability trade and you can target this one, correct? So this is a possible entry in a higher time frame. If I switch here into 1 minute, then what will be processed here and how we can spot the entry in a lower time frame. Now let's switch into the 1 minute, because this one is our 15-minute structure. If I switch here into 1 minute, then you will see how many entry is possible here. So this one is our previous high, which is sweep in a bearish market. Then what happened here? Market sweep this high and break this low. This one is our change of character is here because first low is a broken here. So this one is a change of character. So when we can sell here in this case, you have to sell after taking out the inducement or sweep the structure. So in this case, where is our possible entry for the sell? And a lot of people are selling here because this one is our order block. I mean hidden order block or hidden supply zone, whatever you call. And some people mark this as a order block, which one is here. Okay, even this one is a mitigated, but people also mark this one is order block, correct? But look at this structure is here. Where is the inducement? Find the inducement, then you can buy or sell. So market taken out the high, it means market give you short term move or long term move to the downside. Then you have to wait for the lower time frame confirmation, chalk and wait for the inducement. So in this case, where is the inducement? Inducement means measure high is here. Okay, technically this one is our actual inducement is here. So you have to sell after taking out the inducement. Even order block is available there or not, it doesn't matter. Main thing is the inducement and liquidity. Once market taken out the inducement and liquidity, you can enter without order block is here. Now let's see what happened next here. Okay, so finally market taken out the previous high, those act like an inducement. Market taken out this inducement, you can sell here. And a lot of people mark this one is order block is here, but technically this is not your order block. Remember why? Because this candle is not our highest candle. This bearish candle is our highest candle, taken out the all liquidity and market push downside. So at this point there is no order block is available. Okay, but how we can enter here? We can enter here, market taken out the inducement and sweep the previous high and market just close below it. So you can sell here and put the stop loss just above it. Okay, and your target will be here. First entry is here. If market break this low, I will move my stop loss on break even. And second thing is here, if market give any single candle mitigation entry is here, I can add multiple entry for the sell until broken this low. If market break this low, I will not add any single candle mitigation entry. So now let's see what happened next here. You can see market push downside and now you can add one more position is here. This one is our single candle order block, which one is here. Okay, so this one is our next entry is here, correct? Why? Because this one is our last buying candle before this sell, because this candle taken out the all liquidity is here. So we can add one more position is here. I am telling you here because sometime you will not catch first entry. So if market create structure like this, you can add one more position is here and put the stop loss just above it. If you wanna maximize your reward, then you can put the stop loss, but this can be a little bit risky. But I will recommend you put the stop loss just above it for the safer side, and your target is the same here, correct? But let's see what happened next here. After this one, market mitigate, I mean previous candle mitigate this one. So this entry is a mitigate here. So this one is our second possible entry is here. Now let's see what happened next here. So finally what happened here, you can see this is a pullback and market push downside. So in this case there is no possible entry is here, but you can take another entry, but those are very little bit risky. But let's see what happened next here. Okay, so finally market break this low and I can switch my stop loss on break even, and now I will not any single candle mitigation based entry. And now you can add entry, one more entry after structure like this. Okay, structure sweep or taken out this and mitigate something here, then you can sell. Okay, when market mitigate here, you can start multiple entries in a single candle mitigation until broken this low. Now let's see what happened next here after this one. Okay, let's see. You can see here market is a continue pushing downside, and finally what happened here, market taken out this high and market finally meet our target. This was our target is here. Finally market mitigate this one. You can see here this was a pullback, taken out this pullback, and you can sell another position is here, but not market tap here. So what happened here, market previous candle sweep here and you can add here on this candle. Again market structure broke here because this one is your single leg is here, something like this, correct? And then what happened here, market again push downside, and this one is our first pullback is here. Okay, why not this one? Because this low is not broken by this one. If broken, so this can be your first order block. Okay, so this one is our, so taken out the inducement and mitigate something here, and then you can sell here again, push downside and break the structure, and finally market meet our target. So you don't need to wait for the sell here. You have to sell after taking out this major structure, which one is here, right? Not here, because market taken out the major low. And same thing happen here. You can see this was happen here. Market sweep the major low is here. After major low is here, chalk. After change of character, what happened here? We can buy here because this candle taken out the previous candle low, right? So you can simply buy here on this zone. Again, market break the structure is here. After break the structure, what happened here? We can again buy here, correct? So this is a simple buying entries is here. Once you identify where is the liquidity and find the high probability zone for the buy or sell, then you will see into lower time frame multiple entries for the buy or sell. In this case, you can see this high, see buy this move, and you can add another position is here. Again, what happened here? Market continue pushing downside and finally sweep this high. Okay, you can again sell. You can also buy here because everything is mitigated here. Above is there is no unmitigated, so you can simply buy or sell is here in this case also, right? So these are possible entry for the buy or sell. First of all, you have to identify where is the high or low sweep. When market sweep the high or low, then you can switch into lower time frame, then you can sell. If you don't wanna switch into lower time frame and looks complicated for you, then you can directly buy or sell into same time frame like 15 minute or 5 minute, 1 hour, 4 hour. It's depend on you, and then you can simply buy or sell. I hope this video will help you a lot to understand new thing, that how you can spot the entry area, how to spot the POI zone, and identifying the structure. If you are unable to understand things, then you can watch multiple times, and this video is a very helpful and very powerful to you. And if you are new, subscribe the channel, and don't forget to join our free Telegram channel, link in description. Go and check out, and I will see you on the next video. Happy trading.